Hello everyone, I am Varun Gowda, your mutual fund advisor. First thing, I want to wish everyone a happy Holi and I also wish everyone's portfolio will become green soon. As I mentioned previously, I am making this video comparing gold and mutual fund. Four things I want to cover here. If you had invested 1 lakh rupees in gold and mutual fund 5 years ago, which one would have made you a richer today? And another thing, uh, comparing gold and mutual fund performance with the data, and also risk reward, comparing risk reward, which asset will be better and what investor should consider. Okay, let's start comparing the historical data of Nifty 50 and gold. I know you guys have not directly invested in Nifty 50. You guys have invested in large cap, mid cap, small cap, flexi, and multi-asset sectorial funds. But these funds will proportionately sync with, grow with Nifty 50. If Nifty 50 rises 1%, this will fluctuate and rise 1.2 to 1.3%. The fluctuation will be proportionate. Nifty's 1% will be mid caps 1.4%. Nifty's 1% is small caps 1.5 to 1.7%. Even if it rises or even if it decreases, this will proportionately fluctuate and sync with Nifty 50. So Nifty 50 will be base for all investments in stock market and mutual funds. So we'll comparing mutual fund, Nifty 50 here. Okay, if you had invested 1 lakh rupees in April 2020, this is April 2020, April 2022 to 21, Nifty has generated around 77.8%. 21 to 22, it has generated 21%, and 22 to 23, yes, 22 to 23 it has generated flat return, and 23 to 24 it has generated 30%. 24 to 25, even if it has fluctuated her upper side earlier, but at the end of the year, financial year, it has came down and gave a flat return. So if you had invested 1 lakh rupees in April 2020 in Nifty 50, it will become 2,74,160 rupees at today's price, and at the higher price here it will become 3,23,080 rupees. It has generated around 19.2% CAGR every year average. Okay, like if you have invested in these kind of funds, you can compare, take the screenshot and compare. Your portfolio will fluctuate around this much. See, if you had invested in large and mid cap 1 lakh rupees year, it has generated 2,74,000. But if you had invested in large and mid cap, it has generated around 3.1 lakh rupees. Likewise, okay, let's come to gold quickly. See, if you had invested 1 lakh rupees in gold on April 2020, from April 2020 to April 21, gold has generated 7.22% return. Here also, if gold has earlier raised, but at the end of the year it prices has came down. Okay, in 21 to 22, 13.055%, and in 22 to 23 it has generated 4.2%. 23 to 24 it has generated 12.41%, and in 24 to 25 it has generated around 30%. See, if you are totally from April 2022 as on today, it has generated around 89%. So if you want to get this percentage return, you won't get this percentage of return by investing in jewelry or coin or gold bars, because there you also have to make pay a higher amount, including making charges, wastage, and GST. These only combining makes around 15 to 20% of gold rate. So if gold has given 11.6% CAGR every year, but if you had invested in a physical gold like jewelry, coin, or bars, you have to deduct 15 to 20% from the total return you got. And additionally you will get 2.255% more returns if you are invested in Indian rupees, because these returns what we are seeing is in US dollars, and US dollar got appreciated against rupees. You will get more than what we can see here, additional 2.55% every year. And you also have the option called gold savings scheme, where a certain amount will be invested monthly for 11 months, and at the 12th month that accumulated amount will be exchanged with the jewelry. There they won't charge you on making charges and wastage, but you have to pay GST, which will only have to deduct 3% of GST from the return what you got. Here another option, we can, in the digital gold you can now buy in Phone Pay, Google Pay. There also you have to pay GST while buying, also while selling also you have to pay GST, and there will be a slippage amount that will also fluctuates around 2%, 1.5 to 2% additional. So if you want to completely get this kind of returns, you can also have the option to invest in gold funds in mutual funds. Mutual funds also use the option to invest directly in gold ETF or gold investing funds. There you can easily achieve same returns what gold is giving. Okay, after analyzing this historical data, we can consider that gold is a safer amount. It won't fluctuate much. Even if it has fall 20%, it won't fluctuate as much as Nifty fluctuates. So gold is compared as a safe investment, but Nifty, even if it is volatile in short term, it will generate a huge wealth in long term. So which one is better? It's really depends, guys. If you want a safety investment, if you want to make a safety investment, and it want to balance your portfolio with a risky investment, you can consider gold. But if you want to create a huge wealth in a long term, you can consider Nifty. And investor, what a smart investor can do. A smart investor don't pick just one asset. They diversify, they balance their portfolio. Here the concept of personal finance comes. About personal finance, I am going to make another video explaining detail how personal finance work, what all the things we should consider. Now I'm just give a glimpse here. See, if you are starting your investment journey, before starting your investment journey, you should keep some amount as an emergency fund. Emergency fund, you can invest in a liquid mutual funds, overnight funds, or in a savings account. Even if you can't keep in savings account because it won't give any returns, you can keep in a FD also. And another portion of your income investment should invest in a fixed return generating asset, like debt funds in mutual funds, life insurance saving schemes. Life insurance saving schemes, some insurance give 8 to 9% returns every year, also covers your life risk, death benefits. You can also consider FD investment in a small finance bank to generate a fixed returns every year. For wealth creation, you can consider equity mutual funds. And first thing, with the emergency fund, you also consider health insurance and life insurance. If you have dependents, you must consider life insurance. If you become disability, life insurance will uh, cover your expenses by giving the maturity amount to your dependents. So you have to include all these investments in your investment journey to balance your portfolio. Some, we can directly tell this kind of asset or this investment is better for you. It's always, depends on the diversification you make. The the more balancefied portfolio, the good balancefied portfolio, the more your life will go in a comfortable and a peaceful life towards your financial goals. So again, if you have any doubts in any of the assets or investment options mentioned here in this video, please reach out to me. I will explain in detail and will make you invest in a good return generating assets. And also share it with your friends, guys, and your family also. If you find anyone interested in receiving this kind of information, please share it with them. And also I will put the invite link to the group. You can share that invite group also. They can join the group and they can learn from the information. Okay, happy investing, guys. We will also see detailed information about personal finance in the next video. Okay, thank you, guys. Happy investing.